And after that, we are going to discuss some remedies or what are the certain points which can be very useful or which can be helpful to maintain the rupee value in comparison to dollar.
Correct. Yeah.
Vishal sir, let's just start with the introduction.
Yeah. Basically, here, remember everyone, why does any currency get weak? Any, let it be rupee, let it be dollar, let it be any. When the base currency means here, when we shifted to Bretton Woods was in 1937. At that time, it was decided that somebody should be the main boss. So dollar became the boss. So dollar, and it was basically Bretton Woods was on the totally on the paper currency base. The gold linkage was totally removed for the currencies earlier. Means earlier we had the gold linkage. So after that, what started? The dollar became the big boss. Now, why does any currency get weak? Not only India. See here, if you check any currency in this world, basically Asian countries, Sri Lanka, Pakistan, Nepal, all these Asian countries you might be seeing, all of them are going weak, but we are somewhere better than them. So why are we getting weak? Why are all getting weak? Because everyone is an import-oriented economy, basically. So let's start with the first slide. Yep. For the first time, Indian rupee breached the psychological barrier of 77 against the dollar. Means what? What is the psychological barrier? Psychological barrier means it's like the century. Sachin Tendulkar hitting the century. That's the psychology. So 77, it was long back when the dollar and against rupee was 77. Now it has again reached to 77 and going down further. Means going towards 80 further. As it reaches 80 or moves higher, India will, not only India, the whole world will face problem actually. Okay, you carry on you.
Yeah, so as the sir said that why we are facing issue, why we are having a certain impact on economy, because we are import-based economy. We are not exporting more. So the direct impact will be there on the balance of payment because of the current account deficit. So whenever the rupee fall in comparison to dollar, let's understand first of all the term that is depreciation. What does depreciation mean? Simply, whenever we are talking about the depreciation, it simply means when the value of your home currency falls in comparison to other currency due to demand and supply in the international market. So whenever we are talking about Indian rupee or dollars or any other currency, whenever the demand of currency is high, its value automatically increases. This is the basic concept which we understand in the inflation also. Whenever the demand of goods and services are high and supply of goods and services are low, then the prices of goods and services are always increasing. That is inflation. So same concept implemented on the currency exchange rate also. So whenever we see there is a demand in a particular currency and there is supply is less of that currency, the value of currency will increase. So that's why dollar is becoming strengthening, or dollar's index value is becoming very high, or we can say dollar's value is becoming high in comparison to other.
I'll add 1 or 2 points over here. What has happened? Look at this. If you check, let any country go down, any country's economy go down, always dollar appreciates. Why? Because we have benchmarked everything against the dollar. If you some news or some views of Sri Lankan RBI, means we can call it central government, Central Bank of Sri Lanka. So his views are floating nowadays on WhatsApp. There's a huge speech of him. He has given one good reason for this. The first reason he gave that why any currency depreciates. He says basically we are importing everything. Okay, let's speak about India only. India has a major import of crude oil. 80% our economy imports are dependent on crude oil. Now, if we are importing so much, we'll definitely have an impact. Secondly, gold. We are the second biggest importers of the gold. So if we are importing such hugely, and what are we exporting? What does India export? The major exports of India are gems and jewelry, then petroleum products. We import crude, refine them and sell them to the world. Petroleum products, then agri products.
Agricultural commodities.
Agri commodities. So what happens is, whenever your major economy is based on something importing and then selling back. Gold, gems and jewelries, petroleum products, we have to import first and then we have to export. So what happens, even if the rupee depreciates, what logical thing should happen is our exporters should get the benefit of this. Logically, it should be there, because if we'll come to that on the impact part also later. But that is not happening now, because the import prices are also going up. So if you check the Sri Lankan RBI, central bank's governor's speech, he says we have to come to the productivity level. We have to be more productive in that. Okay, carry on.
Yeah. Similarly, we are also trying to become Atmanirbhar or self-reliant.
Correct. That's right.
Schemes. Like in 2014, already we have introduced Make in India, in which we are trying to make India a manufacturing hub. So why we are focusing on more on production, so that the dependency on the other countries will be less and imports will decreases.
Correct.
That's the only thing, or that's the one of the measure by which we can maintain Indian currency value in international market.
Correct.
So this is depreciation. This is the reason why Indian currency is depreciating in comparison to dollar. And what are the other major issues we are facing in the economy? That is very much inflation. Inflation is now in March, it's near to the 7%, or we are seeing that in the coming months also the inflation will continuously rise. And the reason behind it simply our imports are increasing. Imports value is increasing because we are facing the imported inflation in the country. Everything, as the sir said, everything we are dependent on the other country. We are importing more in comparison to exports. So because of the imported inflation, the prices of the goods and services are keep rising. And the major indirect impact of the crude oil is also there on the goods and services whenever we are importing crude oil. So the prices is continuously increasing because of the value of Indian currency is depreciating. So the crude oil is increasing. So indirectly it impact on the prices of all goods and services because of the transportation charges.
Correct.
So this is the also a reason that we are going to face inflation very much high in the upcoming months.
Yeah. So coming back to this point, the crude oil imports, what we are talking of, that is a major problem. And how can somebody solve this problem? The reason, how can we solve it is if we go solar. See here, but it's not an immediate step. It's a long-term step. We can't go immediately. If I say go solar, it can't happen within next 6 months. Okay, it has to take time. So we have to successively and stage by stage, we have to go on reducing our dependence on the crude and move towards the natural energy, natural or renewable energy. Okay.
Correct. Now
so just one point. What is this retail inflation? Means for the benefit of all. What is this retail inflation? What is this wholesale inflation? Here, there are two types of inflations. Means many of us here, the ones who are listening this lecture or the discussion are mainly bankers. Okay, so bankers, we don't know that much about what is retail and what is wholesale. See here, retail inflation means simple CPI, consumer price index. Wholesale means it's at a broad level. Whenever there's a change in the oil or crude oil prices, it firstly impacts the wholesale price, WPI, and then ultimately it impacts the CPI. So it was just for the benefit of all. What is CPI? What is retail? What is WPI? There are various methods. If you join the classes of ours for CAIIB or JAIIB, okay, both the points are clear, because you have this in PPB for JAIIB, and in CAIIB you have it this in ABM, this module A actually. Okay. So yeah, move on.
Yeah, as you said, that RBI also adopted CPI to formulate monetary policy.
Correct.
So the monetary policy committee is also dependent on the CPI inflation. Then RBI decided the changes in the monetary policy rates also. So as it is written here that the widening trade and current account deficit when we are talking about the current account deficit, it's simply saying that the exports are less in comparison to import. So current account is a part of our balance of payment. Now, what is balance of payment is, it is very important to understand. Simply the economic transaction, the systematic record of economic transaction between India and the other countries or the rest of the world in a financial year is known as balance of payment. Correct. So in balance of payment, we are maintaining the record of all the economic transaction which is happening between India and rest of the world. And the accounting of balance of payment are of three types, which was out of which one is current account. A current account mainly includes the balance of trade, which covers the export and imports of goods and services. And why our current account deficit is continuously increasing? Because we are importing more and exporting less. And because of the depreciation of the Indian currency, we are facing more loss in the current account. So that's why current account deficit is also increasing. So this is the current account deficit.
Just to make you some points clear about this balance of payment and balance of trade, just one point. I'll give you a simple example because we understand through examples. Whenever we are in banks, we open two types of accounts, right? Saving account and current account. What is the current account? Current account is basically whatever we do the business. It's that simple. So BOT or balance of trade is same as that of the current account. And what is BOP? It's the same as that of the savings account. Means if you are the owner, ultimately the profit of that trade or that current account will be transferred to your savings account, because after all you are the owner. Same logic happens. BOT, and in the end the BOT will get transferred to BOP, the net profit of that. Okay, just for all the bankers. Okay. So
Yeah, we
let's
can
move on
simply
to
say that balance of trade is a part of nation's balance of payment, in which we are only including the export import. And in balance of payment, we are including all the economic transactions related to export, import, investments, remittances, or any stock exchange. So we are cutting everything in the balance of payment.
Everything, yeah. Any NRI going abroad, sending money, BOP.
Yeah, correct.
It's that simple. Okay. Let's move ahead.
Yeah. Now the causes because of which we are facing that the rupees value is depreciating and dollars value is increasing. So first of all, there is a strengthening of the dollar index. It means the dollar's value is increasing, and actually the US has decreased the supply of the dollar in the international market. That's why dollar's value is increasing. As it's in a starting, I have said this is a basic concept which we study in the inflation, that whenever demand of goods and services increasing, the prices will also increase because supply is continuously reducing.
Correct.
That's the same reason why dollars is increasing, because US has decreased the supply in the international market, and the value of dollar is very much high because of the demand. Demand is high in comparison to supply. That's why dollars index is increasing.
Correct. This again relates back to Bretton Woods, as we discussed earlier. See here, US has a basic rule. Every country in this world should give the economy or reflect the economy in terms of dollars. So if India grows, let's say by 12%, definitely it'll require more dollars to reflect, speak about its economy of BOT and BOP. So if it requires dollars, definitely the rate of the dollar will again increase. So ultimately it stabilizes. That is the basic reason why US always forces all the countries to explain their economy or reflect the economy in terms of dollars only. Now coming back to this trend, this inflation part, here there's a basic rule. Every 1% rise, means every 5% rise in terms of this dollar, or every 5% fall in rupees leads to roughly 10 to 15 basis points of inflation. 10 to 15 basis points. Now what is basis point? Basis point is nothing but as 1/100th part of 1%. It's that simple. Okay, 100 means 10-15 basis points means 0.1 to 0.15%. So if my rupee depreciates by 5%, my inflation will increase by roughly 0.1 to 0.15%. Okay, so that is generally the ratio followed. And what is it happening now? Rupee has come down drastically, roughly 77, 78. It has come from 72. So 70 to 73. So it is hugely now. Okay. So that is one reason. Second, what we have given, strengthening of dollar index. So definitely, if one currency depreciates, the other one definitely appreciates. Aggressive rates of rate hikes by global central banks. Here, whenever any global central bank hikes the rate, what happens? I'll tell you the basic logic behind this. Why we are falling the short, means why the dollars are falling short. Once the global central banks hike the rate, basically US also, US central bank has increased its rates. Basically, what happens? All these FIIs, foreign institutional investors, they run immediately from this country to their country. Why? Because they are getting 0.1, 0.5% more. If let's say earlier, for example, yesterday I was speaking to someone, 1%, the rate hike of US bonds has risen from 1% to 1.5. So if I am an FII, what will happen is I am getting right now 1 rupee. So if it rises by 1.5%, I'll get 1.5 rupees, means 50% rise in my net yield. So that's why all these FIIs are going back to US and other European economies. Not European, actually, Europe is also facing some problem. But for present extent, let's speak about the US economy. Okay, that is point number 2. Foreign investors pulling up of the Indian market. That is same as the point number 2 only, because both the things are linked to each other. Surge in crude prices. Now, what is this surge in crude prices? Why have the crude prices surged? Okay, look at the basic Russia and Ukraine war. What is going on? In Russia and Ukraine war, immediately everything went up. Basically, if you see the European countries also, they are facing the same problem because their major gas and oil imports are from Russia. So if the imports from, or if there are sanctions on Russia, definitely these crude prices will go up because it is one of the major suppliers of oil for Asian countries, basically Asian. Okay, so that is the basic reason for this surge. Second is CAD, current account deficit. Okay, that is what already we have spoken about it.
Yeah. So as we see, the global central banks are hiking their rates. So similarly, RBI has done same.
Yeah.
RBI has increased the repo rates. Now, what will the impact of this contractionary monetary policy or the tight monetary policy RBI recently introduced? That the commercial bank, whenever having funds from Reserve Bank of India, they have to pay the more interest rate. And similarly, the lending rates by commercial banks will also increase. Now, this is indirectly, or we can say directly, impacting the money supply with the public. So the spending capacity of public will be reduced, and because the loans are getting costlier, it is obvious that the prices again increasing.
Correct.
So
Just one point. We can go for the slide number 2. There it's given everything what we are speaking. That's basically an impact. We can move to slide number 2. Yeah. Next slide. No, next slide.
Impact.
Dollar impact. Yeah.
Yeah.
So imports, loans, basically these are all the things we have just now spoken. What about imports? More imports, basically we'll have to pay more because the currency has weakened. So we'll have to pay more dollars in that case. Okay. Similarly for others, loans
become costlier.
Yeah. So loans will become costlier. Stocks, basically stock market. Now we are talking of stock market. We are seeing a major fall in the stock markets also recently. Last 1 month, if you see, there's a major fall. Why? Because all the FIIs are moving out. See here, there are two things always. Stock markets always move on FIIs. And FDI is basically an investment, asset investment. And FII is basically come, put the money, get money, move
investment
out.
In the securities.
Basically, that's it. So that's why stock markets are moving out because FIIs are moving out. Foreign traveler, that is reducing because here, even now also the COVID impact is still not gone. People are more afraid even now to travel. And number one. Number two, the economy of the human being also, common human being, that has also got into shambles now. So what happens if you have nothing to eat for basic, means if you have to fulfill your basic requirements, will you go for traveling? That's the basic thing which is happening now. Remittances have dried up.
When we are talking about remittances, we will have a benefit here kind of, because when we are getting funds from the foreign country, our foreign reserves will increase. So this is a kind of positive impact because of this we can face whenever remittance from it will be the inward remittance from abroad to India. Whenever the remittances are happening, then we will see the positive impact on the remittance. And RBI intervention, we have already discussed that RBI has introduced the contractionary monetary policy, the tight monetary policy, which is increasing the inflation in the country. So to summarize, imports will become costlier, which will create the imported inflation in the country. Loans will become costlier, the expenditure capacity of public will be harmed. And the the revenues or income will decrease. Foreign travels will reduce because, as the sir said, that we are not capable of
daily needs.
We are not capable of fulfilling our basic needs. The cost of living is increasing because of the inflation. So we are not capable of fulfilling the basic needs. So there is no chance of travel. So this will also decrease. But the remittances will give us the positive impact because whenever we are having inward remittance, we will get benefit out of that.
Definitely.
Now, RBI intervention is about the monetary policy.
And one positive point I'll tell you about this. If you look at the depreciation of rupee, and if you compare the depreciation with other currencies, one important positive point which I am seeing is rupee has depreciated very less as compared to other currencies of the world. Means, for example, Chinese yuan, that has also depreciated a lot. Korean won, that has also depreciated a lot. Japanese yen, it's a developed country, Japan. Their currency has depreciated more than what rupee has depreciated. That is a basic thing. And if you compare ourselves with others, we are in a far better position because of Atmanirbhar Bharat. We are going towards that, and that is a basic reason why Indian economy is still not going to the lines of Sri Lanka or Pakistan. Okay, let's move on.
Yeah, so this is the same thing, impact of US dollar on Indian economy. So as we have already discussed that FPI and FII contribute to economic growth of market, the investment in is decreasing because people are getting back their money from Indian stock market. Next, impact of inflation. Inflation will rise obviously because imported inflation will be there. Changes in fuel prices again directly or indirectly impacting the price of all goods and services. Then the impact of companies with the dollar dominated debt. For example, if you're talking about Google or Facebook, they are earning more money from the foreign countries. So they will be in the positive side that we will earn more money. But when it comes to the importing companies or the businesses who are dependent on the import section, then they will face the losses.
See, our major earners in this whole scene would be the IT companies of India.
Yeah, exactly.
They would be the major, because they are the manufacturers of IT. And see, they are not importing something; they are producing from their brains. So they will be the major. If positive impact, it will have a more positive impact on them. So that was one point to add over here. Okay.
So next is
remedies. Now we can speak of the remedies, because already we have spoken about the stock market and metal prices also, because it's a commodity basically. Now what remedies can RBI move on to, or what remedies can we move on to? See, there are two types of remedies always. One is why the policy matters. Policy matters means what? Basically RBI will come in and rupee is depreciating. So what will it do? It will supply dollars more. The more it supply dollars, they basically remedies. The more it supplies dollars, the supply of dollar will be more, so the rate may go down. But that is just the short-term impact. You can't have a long-term impact using these policies. Second, and the best policy is becoming Atmanirbhar. That is the only way out. Here,
making India a manufacturing hub.
Earlier, if you look at the history of India, Indian consumption or whatever was manufactured in India was mainly consumed in India. Okay. Now we have, because of this dollar, because of this petroleum products, we have become more dependent on others. So that needs to be go on. That is remedy number 2 for the long term. Okay. Yeah, you can add on.
Yeah, so as you said that first of all, to make Indian economy a manufacturing hub will be a very beneficial, which we are trying already. We are trying to become self-reliant. We are trying to become Atmanirbhar. As we know, certain schemes were also introduced by the government of India to make more production in the country. So this is the one way to make sure that our dependency on the import will reduce and our foreign currency reserves will increase. Then already the rupee will start appreciating in comparison to foreign currencies.
Correct. So just to summarize now, because we are towards the end of this. Importantly, this important bank quiz. You can tell about this about the same.
Yeah. So the big interbank quiz we are conducting on 22nd of May, which will be live on Officers at 24/7 at 11 a.m. So those candidates who are willing to participate in this, you will find the form in the description. You will fill that form. You will enroll in that particular form. And what we are going to actually do on 22nd of May, it will be a live quiz between interbank. It is an interbank quiz, and the topic will be your general knowledge, your banking current affairs, and the banking awareness. So it's a kind of a healthy competition we are trying to create between among the candidates, because as we know, JAIIB also coming in the next month. So this is a kind of thing which you are already studying or you are already practicing in the real life also. So general knowledge, banking current affairs, and banking awareness, these are the 3 topics which on which we are conducting the banking quiz. So if you want to participate in this, you can join, or you can fill the form in the description which is available. And by participating in the quiz, you will win a big exciting cash rewards.
In fact, from Adda 24/7, we'll urge every banker in this country to join this competition. Why? Because it's not just a matter of prize or anything winning. You will gain something. Sure, in a race of 10, always there's only one person who wins, but the 9 also gain something. You'll gain some knowledge. That is very important. Okay, so I'll urge on the part of the bank Adda 24/7 that every banker should participate in this. Okay.
Yeah, so the next important information for all of you, that there is a big weekend sale mega offer is running right now for this particular weekend, in which you will get 80% flat on all the products which are on the Officers Adda or Adda 24/7 application related to your promotion exam, JAIIB, CAIIB. So you will get 80% discount on that. And to use the common code here, you can use a common code that is Adda 55. You have to use code for this Adda 55. By applying this code, you will get 80% discount on all the JAIIB, CAIIB, and bank promotion products which are available on Adda 24/7 application. Now, how to enroll this? You can download the Adda 24/7 application, or you can visit the web portal of Adda 24/7. From there, you will find the JAIIB, CAIIB section there, and you can enroll in this particular section. And this offer is only for the weekend.
In fact, many of you who are regularly watching Adda 24/7 lectures in the morning sessions. So there we definitely show each time how to enroll for this discount. Yeah. So you go through this, everyone must go to Adda 24/7, click on the JIB, CIB and look out for the batches, look out for the study material, put the code, and 80% off means what do you mean by 80%? Do you understand it in rupees? Everyone, out of 100, I have to give only 20 rupees. That's a huge thing. Okay.
As we already discussed in the session, there's inflation is going on right now.
Beating the inflation.
Good offer for all of you.
Means this is one measure taken from Adda 24/7 to beat inflation.
Yeah, correct.
Okay, then guys, we'll take the leave now. Okay.
Yeah. So I hope you all are clear about why the dollar is strengthening in the market and why rupee is depreciating. So if you have any doubt related to the current topic, you can ask in the comment section. We will be there for you to ask your query. Okay.
Okay.
So, last but not the least, do subscribe the Officers Adda 24/7 channel and press the bell icon so that all the upcoming sessions notification will be given to you.
That is very important. See here, just join Officers Adda 24/7 because regular updates on various banking exams as well as various updates on the economy are given over there. Download Adda 24/7 app because there you'll get all the live classes plus the study material plus test, everything. It's a one-stop solution for everything. Don't go anywhere. Okay.
Okay. So thank you so much, Vishal sir, for joining the session.
Thanks. Yeah. Thanks.
Thank you all. Take care and stay safe.
Yeah.